What if Warren Buffett already planned his final billion-dollar move, and no one's talking about it, until now? Most people think Warren Buffett's best deals are behind him. But his biggest move is still ahead. Let's clear this up now. Bill Gates, Tim Cook, Hillary Clinton, a constellation of the world's most influential, talented, and affluent individuals, sat in the audience, heads bowed, diligently taking notes like eager students. Why? Because this was it, the final chance to learn directly from the legendary investor, Warren Buffett. His last appearance at the Berkshire Hathaway shareholders meeting, and this time, Buffett held nothing back. He revealed his precise strategies for buying stocks, his investment allocations, what assets he predicted would collapse, and how he planned to execute his ultimate acquisition. If you could truly grasp his words, you'd recognize this as arguably the most significant financial maneuver in human history. This chess game, it turns out, was meticulously planned as far back as 2003. What's more, you'll see that what the United States is doing now is almost identical to what Buffett discussed and calculated back in 2003. In essence, since 2003, Buffett has explicitly laid out how the American capitalist class would orchestrate this entire game. It's only now, at his final shareholder meeting, that they're executing the largest historical net gathering and takeover. Why Buffett didn't buy the dip? For those who followed my previous videos, you'll know that last year, billionaires like Bill Gates, Mark Zuckerberg, and Jensen Huang perfectly timed the sale of their company stocks, adroitly sidestepping the recent global market collapse. Yet, the biggest beneficiary of this crisis remains Warren Buffett. Not only does he hold the highest cash reserves in history, but he also strategically positioned himself early into soaring Japanese yen assets. But here's the puzzle: the US stock market has recently begun to recover. Logically, if Buffett successfully sold off before the crash and held enormous cash reserves, shouldn't he have capitalized on last month's market downturn by buying in aggressively? Surprisingly, as of last December, Buffett's cash reserves still hovered around $330 billion. If he had bought during the market's trough, that sum alone could have acquired both Goldman Sachs and Morgan Stanley. Yet, his cash reserves didn't just not decrease, they continued to grow this year, reaching approximately $350 billion. This indicates that Buffett didn't buy during the market crash, he chose to remain in a waiting state. Why? Many now suggest the stock market has fully recovered, leading some to believe Buffett missed a prime opportunity to buy the dip. He sold everything and didn't repurchase, so isn't he at a loss? Why does he hold more cash after the crisis? His answer was clear at this shareholder meeting. He admitted that not long ago, he almost spent $10 billion. He stated that if it were a truly valuable and reasonable investment opportunity, he would easily deploy that sum. But ultimately, he couldn't bring himself to spend it. He also mentioned that since acquiring Berkshire Hathaway, the company's stock has plummeted by over 50% on 3 separate occasions in short periods. He felt that the recent market turmoil, lasting only a few dozen days, was insignificant compared to historical downturns. So, what does this signify? It means he has $350 billion at his disposal, yet even a $10 billion expenditure feels unreasonable, unspendable. And his subsequent remarks utterly astonished me. When asked how he would address the risk of a declining US dollar, he flatly stated that they would not invest in a currency on its way to hell. Even more chillingly, he declared he would spend all of his cash within 5 years, retaining only $50 billion. This implies he's currently accumulating dollars but plans to liquidate them completely within the next 5 years. Simultaneously, he believes the dollar will collapse. Isn't that a stark contradiction? He thinks the dollar will crash, yet he holds a massive pile of dollar cash. He recently shied away from even a $10 billion transaction, despite the US market recovering, and now claims he'll spend it all within 5 years. If you perceive this as contradictory, it's because you've made a crucial assumption, that the crisis is over, that the worst is behind us. Therefore, his actions appear inconsistent. However, if the recovery is merely superficial, if the true carnage is just beginning, then everything makes perfect sense. The frugal island and prodigal island parable, a strategic deception. First, I find it perplexing that most people, upon hearing the key takeaways from Buffett's recent shareholder meeting, focused solely on his supposed criticism of the U.S. government. They claimed Buffett didn't explicitly criticize the U.S. government, but every word subtly implied it. For instance, he directly stated that trade wars and tariffs were acts of war, a grave mistake in his view. With 7.5 billion people worldwide disliking you, and only 300 million Americans pleased, he didn't believe it was right. In other words, he thought tariffs and trade wars weren't beneficial to the U.S. But is that truly the case? In 2003, Buffett penned an article that I'll summarize. He described two islands, Frugal Island and Prodigal Island. Initially, the inhabitants of both islands worked 8 hours a day and were self-sufficient. But one day, the people of Frugal Island decided to work an additional 8 hours daily, using the extra products to trade with Prodigal Island. The condition was that Prodigal Island only needed to issue IOUs. Simply put, Frugal Island did the work for Prodigal Island, while Prodigal Island merely wrote debt notes. This continued until one day, Frugal Island redeemed all of Prodigal Island's IOUs for their currency, then used that currency to buy up all the land on Prodigal Island. At that point, the people of Prodigal Island lost their land and had to pay rent to Frugal Island. Not only that, but they also had to work 8 hours a day again to repay their debts and interest. From then on, Prodigal Island became a colony of Frugal Island. In 2003, Buffett used Prodigal Island as an allegory for the United States. He argued that Americans no longer undertook arduous manufacturing tasks, outsourcing them to the rest of the world, Frugal Island, while borrowing money by issuing bonds to pay the world. The result, he predicted, was that one day, the rest of the world, like Frugal Island, would bring U.S. bonds and IOUs to exchange for U.S. dollars, then use those dollars to buy up all of America's land and resources. At that point, Americans would have to return to difficult labor to repay their debts and pay rent to the rest of the world, effectively being controlled by the world. In simpler terms, America's predecessors incurred debt, and future generations would bear the burden. Therefore, Buffett then conceived a solution, issuing import licenses to all U.S. exporters. It's quite simple. For example, if I'm a U.S. exporter specializing in cars, selling $10 billion worth globally each year, the U.S. government would issue me a $10 billion import license. I could then sell this license to U.S. importers who specialize in bringing goods into the U.S. After U.S. importers buy this license, they can then use it to import $10 billion worth of goods from abroad. Since U.S. importers have to pay for this license, that money would ultimately be transferred to foreign exporters. This means they'd incur an indirect cost when selling goods to the U.S. More simply, if you want to sell goods into the U.S. today, you have to pay to buy an import license from U.S. importers. Without this license, you can't sell to the U.S., and the money from that license ultimately goes to U.S. exporters, who profit and pay taxes to the U.S. government. If this still seems unclear, don't worry. This mechanism is virtually identical to current U.S. tariff policies. The U.S. government currently states that they impose tariffs on the world because they believe the world is earning money from the U.S., forcing Americans to continuously borrow to pay the world. If this continues, sooner or later, other nations will become wealthy enough to buy up the entire U.S. Thus, the U.S. must impose tariffs. If you want to sell goods into the U.S., if you want to earn money from Americans, you must share a portion of that money in the form of tariffs. But the U.S. government calls it tariffs, while Buffett called it import licenses. And if implemented Buffett's way, that import license would be equivalent to a 100% tax on the entire world. He wanted to ensure that the U.S. imported only as much as it exported. The grand illusion, when Prodigal Island colonizes Frugal Island. Therefore, many believe Buffett criticized the U.S. government at the shareholder meeting for imposing tariffs. But in reality, he himself proposed a similar plan as far back as 2003. Furthermore, he even wanted to go further than the current U.S. government, aiming for a 100% tariff on the entire world. What's called a tariff today was actually proposed by him in 2003. Now, the US is merely following what he said. Yet, he himself criticized tariffs as an act of war. Isn't this contradictory? Actually, it's not contradictory at all because a tariff is a tax, while an import license is like an entry ticket. Different names, but fundamentally different. For example, when you go to a concert, buying a ticket is normal. But if you had to pay a tax to attend a concert, no one would want to go anymore. So, Buffett wasn't against the tax itself, he just disagreed with the term tariff. Since 2003, he had already concocted a story and a justification for the US to impose taxes, the tale of Frugal Island earning all of Prodigal Island's money, then buying it outright and turning it into a colony. And if you believe that story, if you believe in Frugal Island and Prodigal Island, then your country will be bought up by the US. What does this mean? The crucial point is here. What's the truth in reality? Can the entire world currently exchange US bonds for all of America's land and assets? If that were truly the case, wouldn't the whole world have already bought up the US? Wouldn't the US have become a colony of the world? But you'll discover that the truth seems to be the opposite. The US owes money, but it doesn't actually need to pay anything back, it just prints money. Not only that, but it can also print money to buy up assets worldwide. Why? I explained the details in my previous video. Here, I'll just put it simply, it's true that the world has earned a lot of money from the US, but what the US owes is US dollars. When it's time to pay, they just print dollars, and the debt is settled. And every time a financial crisis occurs, US capitalists take those newly printed dollars and buy up distressed assets around the world. For example, in South Korea, many of the largest shareholders of Samsung, LG, and various banks aren't Korean, they're American. In other words, Prodigal Island hasn't been bought by Frugal Island, instead, Prodigal Island is colonizing Frugal Island. If you believe the Frugal Island story and tirelessly engage in difficult work, hoping one day to earn US dollars and buy up the US, the ultimate outcome is that you will be bought by the US. This is the grand chess game orchestrated by the capitalist class. So, while people are diligently working with their heads down, they should also look up at the sky a bit. If you think that by simply not investing, not starting a business, not spending money, and just working hard to earn, no one can take your money, then when the capitalist class simply prints money, inflation will immediately rob your money of all its value. At that point, you won't be able to afford a home, your earnings will constantly depreciate, you'll be renting forever, merely existing instead of truly living. It's not that if you don't cause trouble, trouble won't find you. You have only two choices, either become an exploited Frugal Islander or become a Prodigal Islander who exploits others. Small investors versus giants, agility as our superpower. What advantages do we, as small individual investors, have compared to giants like Buffett? Our agility. Buffett might need to plan months, even years, in advance to buy or sell assets. We, on the other hand, just need to wait for the money flow to definitively pour in and start pushing prices up, then jump into the market, it's not too late. This means the giants create the trends, and we simply follow them, make our money, and exit immediately. So, why did Buffett propose this import license policy, which is essentially a tariff, in 2003? Because in that year, Buffett realized that America's old method, lowering interest rates and printing money to harvest the world, would eventually lose its effectiveness. When it did, a new method, namely tariffs, would be necessary to continue harvesting the world. What does this mean? Previously, whenever the US economy faced a downturn, simply lowering interest rates by about 5% was usually enough to rescue it. When interest rates fell, the cost of borrowing money for business and investment also decreased. Lower costs, higher profits, right? For example, in the 1981 recession, the Fed cut interest rates from 18% to 13%. In the 1991 recession, they dropped from 9% to 4%. In the 2000 recession, they fell from 6% to 1%. You'll notice interest rates continuously declining. Then came the 2008 financial crisis, where the Fed directly slashed interest rates from 5% to 0%, yet the US economy still couldn't recover. It was like a patient who needed medicine for every illness, but with each dose, their body developed more resistance. Previously, 2 pills were enough, later, it was 5, then 10, and finally, the medicine had no effect at all. Similarly, in 2008, lowering interest rates to 0 was useless. The only remaining option was to inject medicine annually, quantitative easing, printing money, providing capital at near zero interest rates to capitalists for business and investment. In 2008, over $3 trillion was printed. By 2020, with the pandemic, an additional $5 trillion had to be printed. The U.S. national debt ballooned, and now, no one wants to buy U.S. bonds anymore. Even if the Fed keeps interest rates high, even if the U.S. offers high interest to lenders, U.S. bonds still aren't selling. If no one lends money to the U.S. anymore, and the U.S. can only print money to spend, the dollar will become worthless, plunging into hell. Therefore, by 2025, with interest rate cuts no longer effective and money printing also failing, the U.S. must resort to Buffett's 2003 proposal, tariffs. Tariffs are like a defibrillator, shocking the U.S. economy back to life. To put it simply, before, the U.S. was responsible for printing money, while the rest of the world did the heavy, dirty work. The goal was for the world to accumulate wealth and work for Americans, to believe the story that if you just worked a little harder on Frugal Island, one day you could buy up the U.S. Thus, U.S. money had to continuously flow abroad. The implication here is that the U.S. had to continuously spend money on the world, then reclaim those dollars from the world by selling U.S. government bonds. Simply put, the U.S. prints money to buy your goods, you earn U.S. dollars, and then you lend those dollars back to the U.S. This allows the U.S. to continue buying your goods, and you, in turn, continue to lend your earnings back to the U.S. This way, the U.S. has an unending flow of cash to buy your goods, needing only to pay you a small amount of interest each time. Therefore, initially, the U.S. could solve its debt problems by simply lowering interest rates. But later, as the people on Frugal Island gradually realized that Americans were merely using sleight of hand, gaining everything without doing any work while consuming all the goods they painstakingly produced, people began to reduce their purchases of U.S. bonds, meaning they lent less money to the U.S. At that point, the money the U.S. had spent couldn't be recovered, and without borrowing, interest rate cuts were no longer effective. Consequently, the U.S. had no choice but to expand its balance sheet, continuing to print money to spend. Now, in 2025, people worldwide are buying fewer and fewer U.S. bonds. Neither interest rate cuts nor money printing can attract global capital anymore. Therefore, a new method, tariffs, must be employed to seize money from the world, and even force global factories to relocate to the U.S. Simply put, before, the U.S. transfused blood to the world, now, it's sucking the world's blood, forcing the world to serve the U.S. In other words, Prodigal Island no longer needs Frugal Island to work for it but is directly relocating all labor from Frugal Island to Prodigal Island. Thus, the center of power shifts. The dollar's descent and Buffett's ultimate play. With tariffs combined with the U.S. dollar's descent into hell, what exactly is the U.S. playing at? Everyone should know that tariffs have led to a severe depreciation of the U.S. dollar. A few years ago, when U.S. bonds were appreciating, many people bought them, meaning they lent money to the U.S. This year, 2025, a large volume of U.S. bonds will mature, meaning the U.S. has to pay back its debt. Those who lent money to the U.S., if they don't reinvest in U.S. bonds, will have to convert their dollars into their national currencies, right? And if the dollar is in freefall, depreciating severely as it is now, what will happen? For example, in 2020, interest rates were very low, and you bought U.S. bonds, receiving only a 1 to 2% yield. Now, the bonds mature, and you receive that interest. But when you want to convert dollars to Japanese yen, euros, or Taiwanese dollars, you find that your currency has appreciated by 10%. This means the dollar has depreciated by 10%. The result is you earned 1 to 2% interest but lost 10% due to the exchange rate. So, you have only two choices: either don't continue lending to the US, accept the loss, and withdraw, or continue to buy US bonds. Because currently, US bonds offer a 4% interest rate, and the Federal Reserve is likely to continue printing money, this 4% interest rate is considered very high. If you buy in and lock this interest rate for 10 or 20 years, waiting for the dollar to recover and appreciate again, you won't be at a loss anymore. But in reality, you have no other choice. You can only continue to buy US bonds, and long-term ones at that. Therefore, one of the effects of tariffs is to force capital to be locked within the US, unable to escape. This way, US bonds will continue to be bought, and the bond demand crisis will be resolved. But once people prefer to accept a loss rather than continue buying US bonds, what I mentioned in my previous video will happen: the US will be reborn from the fire, meaning a financial crisis will erupt to harvest the world, and then it will print money again to restart its economy. If you don't understand this principle, you can refer to my previous video. Currently, we see that Buffett still hasn't bought the dip, and not only has he not bought any stocks this year, but he has also continued to divest from bank and financial stocks. Divest means selling every single share. In other words, Buffett is still acting to bet on the biggest financial crisis in history. Why? First, if what Buffett says is true, that the dollar is going to hell, meaning it will continue to fall by 10%, 20%, or even 30%, what does that imply? It means that if a financial crisis truly occurs, all the money invested in US assets worldwide will be trapped. Right? In other words, when this financial carnage unfolds, no one can escape. If you try to run, you'll die a more gruesome death. Because you won't just lose money due to falling US stock prices and depreciating US bonds, you'll also lose due to the continuing depreciation of the dollar. You'll only suffer further losses. The inherent value of US assets can then be used to buy your distressed assets at a cheaper price. Second, if the dollar continues to depreciate, capital flows will be cut off and will no longer be able to enter the US. In other words, if you see US stocks collapsing and the dollar also sharply declining, you'll be even less likely to buy US stocks. Because as soon as you invest, you'll be trapped. This will be a life or death battle. If you're a foreigner, and your money is tied up in US assets, you can't escape. You might find this very contradictory because Buffett holds $350 billion, with a cash proportion of only about 25%. This means he only holds 25% of his assets in dollar cash, while the remaining 75% is still invested in US assets. If US assets collapse and the dollar also depreciates, how does that benefit him? Friends, most of Buffett's assets are not listed stocks. Even though 75% of his assets are invested in US assets, less than a quarter of that is invested in the stock market, and most of it is in companies like American Express or Coca-Cola. These are companies that won't go bankrupt and will continue to increase dividend value. Buffett earns not from stock prices but from company dividends. The vast majority of US assets that Buffett holds are through outright acquisitions. These are unlisted companies. So, if the US collapses, do you think that would significantly affect him? Falling stock prices have no bearing on unlisted companies. As long as the companies he invested in don't go bankrupt during a financial crisis, they will continue to generate profits for him. He earns money from business operations, not from stock prices. Second, even if the dollar goes to hell, it won't become worthless. For Buffett, does this have a significant impact? It's like being Japanese: if you don't travel, don't buy foreign goods, don't invest abroad, and only spend yen domestically, then a depreciating yen won't affect you. Similarly, Buffett holds over $300 billion, but he can't convert it into other currencies. This money can only be trapped within the US. For instance, previously, a mere $8 billion transaction caused the Taiwanese dollar to appreciate by 10%. If Buffett were to convert his entire $300+ billion into other currencies, the dollar would truly become worthless. Buffett isn't advising us not to hold dollars, he has no other choice but to be forced to hold them. His money can only be trapped within the US. You see, even when investing in Japan, he can only borrow money from Japan and use Japanese money to buy Japanese assets. He cannot use his own dollars. This means that even if a financial crisis occurs, even if the US collapses and the dollar depreciates, it won't significantly affect Buffett because his money can only be invested in US assets. If the financial crisis is a life-or-death battle, if it can trap all the capital that has flowed into US assets for many years, and even cut off global capital's access to the US, then for Buffett, who can only spend money within the US, he will be the biggest winner in this crisis. He even explicitly stated that when a crisis occurs, there will still be opportunities to buy assets at extremely low prices. He said that within the next 5 years, he would reduce his cash holdings from $350 billion to $50 billion. This implies that the remaining $50 billion in cash is actually the minimum operating capital required to run his companies. For example, an insurance company needs to maintain about $20 billion in its accounts to cover insurance claims. So, if he spends all the money he has and only retains $50 billion, it means that within the next 5 years, or before Trump's term ends, there's a very high probability of an acquisition opportunity that Buffett considers extremely reasonable and cheap. This opportunity is even more attractive than the current major crisis. Buffett has made it clear that the recent movements in the US stock market are not a significant fluctuation at all. This is not a true bear market. In other words, this current collapse, for Buffett, isn't even an appetizer. Because he hasn't even acted, on the contrary, he has sold off all his bank and financial stocks. This is because when the dollar goes to hell, the heaviest losses will fall on banks and financial companies. By 5 years from now, in 2030, Buffett will have completed his bottom fishing, and what he buys will be US assets, because he can only buy US assets. After 2030, US assets may well soar again. Our strategy, risk aversion over speculative gains. Like Buffett, my primary currency is also the US dollar. The difference is that his capital scale is infinitely larger than mine, so he cannot casually buy assets, he can only buy short-term bonds to avoid risk. We, on the other hand, have been investing in gold, Bitcoin, and the Japanese yen since last year. Why? I've said it many times. The reason is that I need to find safe haven assets to avoid the depreciation risk of the dollar. As long as the safe haven assets I buy appreciate more than the dollar depreciates, I can at least preserve the assets I earned last year. However, many people now, as soon as they see a slight recovery in US stocks, immediately convert all their money into dollars to invest. I believe everyone has their own choices, and we should respect them. As for me, I can say that the risk of investing in US stocks currently comes not only from the US stock market itself but also from the currency market, specifically the dollar. Suppose you are Japanese. If you buy Japanese stocks to buy the dip and profit from the rebound, at most you'll lose money if the Japanese market declines. But if you are Japanese and buy US stocks, when US stocks fall and the dollar also falls, you will lose on both ends. Simply put, if you invest in US stocks today, you might profit from the stocks but lose due to the exchange rate. Then your assets will be trapped in US stocks, because as soon as you convert your money back to Japanese yen, you'll already be at a loss. And if the door is closed, when this financial carnage truly happens, those who perish will be those who are recklessly rushing into the market now. For me personally, from late last year until now, what I want to do is avoid risk, not make profit. Making profit is something to do in the most profitable markets, not in uncertain recoveries. If I profit, it's just a little from the rebound, but if I lose, I could be trapping myself. Finally, if there are any details in today's video that you didn't fully understand, I recommend rewatching my previous 2 or 3 videos. I'll just say a few words, my videos have tightly linked logic. If you don't watch the previous videos, some might think I'm just speaking after the fact. But in reality, many things have been said in advance. I can't re-explain everything every time, it would be too cumbersome, and the video would be too long. The situation has become even more chaotic recently, but due to time constraints, I can only stop here. What are your thoughts on Buffett's long-term strategy? Do you believe the frugal island and prodigal island parable accurately reflects current global economic dynamics? I share free information on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video widely. Your support is the only reason we can research these explosive topics. I wish you all financial freedom soon. Thanks for watching this video till the end. Take care and see you in the next video.